Good morning and welcome to Stock Market Today for Friday, December 27th, 2019. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities finished mostly higher in post-holiday trading. Consumer discretionary was the standout as Amazon added more than 4% on the day. Comm services and technology also outperformed while healthcare and energy lagged. Healthcare, the only sector to finish lower on the day. Treasuries were slightly stronger. The dollar was stronger against the yen and weaker on the euro cross. Gold added on to its recent strength, added 60 basis points on the day, and WTI crude was up 90 basis points ahead of the release of inventory data today. As we get to the desk this morning, futures in the U.S. are indicated higher in pre-market trading after finishing higher yesterday. Asian markets were up overnight, and European markets are moving higher here this morning. Treasuries are stronger across the curve. The dollar is stronger against the euro and sterling, but weaker on the yen cross. Gold is flat. WTI crude is up 30 basis points. And as we check out the structure of the S&P 500, more new highs for this index as well as the other major markets in the U.S. The Qs and the IWM also moving higher on the day yesterday. Near-term support moves up to the 3150 to 3200 range, 3200 being the gap higher, 3150 being where the market kind of stalled out around Thanksgiving. We're waiting for price-based resistance to develop. We haven't seen it yet. The RSI remains overbought, right? Here's the RSI up at 78 as of yesterday's close. That's the 14-period RSI. So overbought in the near term, yes, but more importantly, in bullish ranges and lending a momentum confirmation to the strength that we've seen in price over the past few months. At the same time, Chaikin money flow has been and remains bullish. Now, it has declined a little bit of late, but it does remain on a bullish rating. So our indicators are confirming what we're seeing in the price action. We've identified the support levels. We've been gradually raising them as the market has moved higher, still waiting on near-term resistance from a price-based perspective to develop. As we dive in to our market in a minute, what am I writing about in my note today to Chaikin Analytics clients? Well, investors take the SPY to new highs following the Christmas holiday. We touched on that a little bit. We use our proprietary overbought, oversold indicators to give us an indication of where specific markets, ETFs, and stocks are within the context of their existing trend. And right now, the major market ETFs remain overbought within their existing uptrends. Some of the key themes and relationships that I look at and write about every Friday are showing early signs of stalling, right? And it's too soon to call it a reversal, but some early signs of those risk-on indicators and relationships that we look at are showing some signs of stalling out. It just could be a function of slow market trading here around the holidays, but it's something we're going to pay attention to. Transportation has been a laggard in this bull market throughout 2019, and as I said, futures do point to a higher open here today. Taking a look at the major averages, from a power bar perspective, we can see that the Dow added 37 basis points yesterday, 2-to-1 bulls to bears, 6 bullish or very bullish stocks for 3 bearish or very bearish stocks, nearly 2-to-1 bulls to bears, 119 to 60 for the S&P 500, which added 54 basis points yesterday, better than 2-to-1 for the NASDAQ, which was an outperformer. 24 bullish or very bullish stocks in the NASDAQ for 11 bearish or very bearish stocks. Small caps were a slight underperformer. They were an underperformer yesterday, adding only 2 basis points on the day. 743 to 223 bulls to bears there. Bonds uptick, sending yields lower. Consumer discretionary, as I said, was the standout sector on the day. Added 1.22%. 10 bullish or very bullish stocks there for 9 bearish or very bearish stock in the XLY ETF. But let's keep in mind, Amazon, as I said, was up 4% or over 4% yesterday. It is a large weight within the consumer discretionary sector, and that drove a lot of the upside in that group on the day yesterday. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish away from these major markets. The other indexes are mixed. Now let's hit our stock of the day. This is a bit of fan favorite here at Chaikin Analytics. CVS Health Corp, ticker symbol CVS, closed at 74.48, down 4 basis points yesterday as healthcare was under pressure. CVS has a bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong earnings performance. Does have some weak price volume activity of late as it consolidates after this strong move higher that began in August. So when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. We have a strong trend above the rising long-term trend line and a strong industry group. The healthcare providers and healthcare services names have been strong of late. We've highlighted them on this show. As we read the chart from the bottom up, what should immediately be clear is that the market and model are in agreement, right? The rating turned bullish or very bullish for CVS around the August timeframe, and then shortly thereafter, CVS began to outperform the market and continues to outperform as of now. At the same time, Chaikin money flow is bullish, and it's been pretty much persistently bullish since August when the rating changed and when the outperformance began. One of the only things that I can really see is we're overbought here in the near term. Our overbought, oversold indicator, similar to the markets in general, is overbought for CVS. Now we're consolidating a breakout above the $70 to $72 range. That breakout does remain in place. You can call it price-based support in that level, $70 to $72. For those of you who want to wait for an oversold condition, I think the best course of action would be to see a consolidation above that support zone that leads to an oversold reading on the part of our overbought, oversold indicator, and then all else being equal, that sets up a good entry or a higher probability entry for a stock like CVS. Now, this is a name that we've highlighted numerous times in our notes to clients. Mark Chaikin has highlighted it in his weekly note. I've highlighted it in my daily note. Continues to be a name that we like. If you're there and own the stock, I think it makes sense to kind of make sure your stop is where it needs to be. If you're not there quite yet, I think you can wait for a better entry when our overbought, oversold indicator moves closer to an oversold condition, right? This was kind of like your ideal setup point right here as the stock consolidates. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Nice to see technology at the top of the list. Largest weight in the S&P 500. Discretionary comes on strong with that big move yesterday on the heels of that 4% lift from Amazon. Energy still up in that top 3, right? Have to start paying attention to what's going on in energy. Remember, last week or 10 days ago or so, we started highlighting XOP by saying it had more bullish stocks than bearish stocks. So start to pay attention there a little bit. Materials, industrials, comms, and healthcare are middle of the road. And then our laggers over the past 5 days, financials, which had been moving with rates, but rates appear to be stalling out. We're going to take a little bit of a look at that later in the show. REITs, staples, and utilities, your defensive areas of the market, lagging over the past 5 days as the market has kind of gone into a bit of a melt-up mode into the end of the year. Let's take a look now at our industry in focus. It's telecom services, which over the past 6 months has been an underperformer, lagging the S&P 500 by about 8.5%. Power bar ratio, which measures future potential, is weak. 10 bearish stocks for 6 bullish stocks, ranks it number 20 of 21 subsectors, down 1 slot over the past week. So some of the names there that you want to avoid with very bearish Chaikin Power Gauge ratings: InterDigital, IDCC, Viasat, VSAT, and Bandwidth, BAND. And as we look at the fund, you can see XTL has a neutral Chaikin Power Gauge ETF rating. The trend is strong as it is above the rising long-term trend line, but it's been a lagger for the majority of 2019. Money flow is bearish, and the fund is currently overbought. So this is an area of the market where we're not really focused for bullish ideas at the moment. Should that change, we'll start to identify them. Let's look at what's trending right now. Yesterday's S&P 500 movers and shakers, our gainers and losers. There's Amazon at the top of the list, as they said that they had a record holiday season, sends the stock higher by 4.44%. Retailers in general had a good day yesterday. Macy's, nothing company specific, stock higher by 2.6%. Apple trades at another 52-week high. Apple has been on fire of late, up 1.93%. Does have a bullish rating, a neutral rating rather, here at Chaikin Analytics. Tapestry, another retail name, up 1.8% on the day, and JW Nordstrom up 1.8% as the retailers had a solid day of trading yesterday. The loser side of the board, really nothing company specific to speak about. One of the themes that's jumping out at me, INCY down 2.9%, Perigo 1.9%, and Mylan 1.6%, all part of the healthcare sector that was down yesterday. Newell, no real news to send the stock lower by 2.5%. Same with NRG, down 1.66%, but didn't see any company-specific news there, right? It's a holiday week. We're not likely to see a lot of company-specific news really until we get into January and start to get the earnings reports, the fourth quarter earnings reports out of companies. We're kind of in a vacuum as it relates to company-specific news. Now, let's talk about some of the key themes and relationships that I'm looking at here today and what we're talking about when we're seeing signs of stalling out. What we're looking at here is the equal weight consumer discretionary ETF against the equal weight consumer staples ETF. The reason we're looking at equal weight is because, as I said, Amazon is a big weight. It's over 20% of the consumer discretionary industry group, sector rather. So we want to isolate for that. And really what we're looking for is signs of risk on, risk off in the marketplace. When this line is declining, it means that discretionary is lagging staples. And that's a sign of a little bit more risk averse positioning on the part of investors. But notice that when the market started to move higher in the September-October timeframe, discretionary began to outperform the staples, signaling there was a bit of a risk-on mentality on the part of investors. Now, we've reached this declining 200-day moving average for the ratio and this resistance zone based on price, and we're starting to see a little bit of a stalling out, and this is what I'm talking about. We're seeing it in a few of the other key themes and relationships that I look at as well. At the same time, the RSI of this ratio is in the middle of the range, having become neither overbought nor oversold of late. So neutral momentum coinciding with this stalling out / consolidation that we're seeing in the ratio. Right? Not an alarm bell just yet, but something that I want to keep an eye on as we watch for continuing shifts under the surface within the marketplace. We'll continue to bring these thoughts and ideas to you as they crop up. I write about them in my note to clients every Friday, but I obviously watch them every day. So discretionary versus staples on an equally weighted basis, something we're going to be paying close attention to as the calendar flips to 2020. Another key theme that we watch more as a gauge for investors' thoughts on the global growth outlook. It's the copper to gold ratio. You've heard me talk about it here of late, because when copper is lagging gold, that's a sign that investors are concerned about the global growth picture. But again, as the market started to move higher, as investors started to take on a more risk-on mentality in September, October, copper began to outperform gold. Now it's traded up to the declining 200-day moving average and this price-based resistance level for the ratio where it has begun to stall out. The RSI for the ratio has shifted to bullish ranges, but it's interesting to me that during this entire advance from those September lows, the ratio has not been able to become overbought. So something, again, one of these kind of stalling out characteristics that we're writing about in our note today and talking about here today. And notice that the stall in the copper to gold ratio is playing out as the 10-year yield trades up towards resistance at the 2% mark. When the yield was rising, that was when copper was outperforming gold. We're going to continue to watch closely. If the 10-year yield lifts through 2%, we would expect to see copper begin to outperform gold. We'd expect to see more of a risk-on stance in the marketplace. For now, we're keeping an eye on. We're going to defer to the existing trend. We're going to call it near-term stalling out. Could be a function of holiday-type trading. And then finally, I said we're going to look at the transports for those who are focused on Dow theory, what you'll notice is the transports have not broken to a new high with the broader market. Here's the IYT, the iShares Transportation ETF, stalling out at resistance, not breaking to new highs with the broader market. RSI in the middle of the range here, not really becoming overbought or oversold. But interestingly, transports have lagged during the bull market of 2019. They've been in a relative downtrend since the February timeframe where they remain today. So just a few of the things that I'm watching. I hope that you all have a great weekend. I want to wish you all a happy new year. I'll be back on Monday.